Hi, this is Kribakaran Rajendran, founder of Algo Trading from squareofbots.com. So in this video, I'm going to explain like what is pledging and how can you pledge and trade. Specifically, if you're an investor who is having long-term holdings in your account and you're trying to get into options trading. And in this video, I'll explain how you can get started with options trading without bringing in additional capital. How can you make use of your long-term holdings and use that as a collateral to trade this options trading. So there are two types of traders. So one type of trader who has long-term holdings in their account, and there are other type of traders who do not have any long-term holdings in their account, but they have trading capital in cash. So the first set of traders wanted to utilize the stocks which is lying idle in their account, and the second set of traders who has the cash but they wanted to make additional returns from their trading strategy. So whatever the trading strategy that they are trading, so if it is giving them 30% returns, they are looking to find is there any way to make additional 5% or 6% returns using this capital. So there is a solution for both these type of traders. So first, let me explain what is pledging. Consider you wanted to start a small business and know this business requires some initial capital, but you do not have any cash to start this business. So what you do, you ask your parents or you ask your spouse if you're married. So they would give you some gold. You can pledge that gold and get some capital and you can deploy that capital into your business. So what happens here is you have a gold which has some value. So you take this gold to a bank or to a finance entity or to a pawn shop and tell them like I wanted to pledge this and give me some amount. So if you are taking that gold and the bank or the entity will check, okay, what is the current price of this gold? If the current price is say suppose 5,000 rupees per gram. So they'll say, okay, you have 10 grams, so probably you can get 50,000 rupees as a loan. So they can't give you the complete 50,000 to you. So they'll say currently it is 5,000 rupees per gram. Probably I'll deduct 500 rupees, 10% from it, and I'll consider 4,500 rupees as a per gram, and accordingly I'll calculate the total value. So if it is 4,500 rupees per gram, so for 10 grams if you're pledging, you get 45,000 rupees. So even though the current price of the gold, if it is 5,000 rupees per gram, they can't give you 5,000 rupees due to the gold price fluctuation, business risk. They'll detect certain percentage and accordingly they'll give you the money. So using that money you can start your business, and also they'll charge you additional interest every year, so that as long as your gold is with them, you have to pay this interest. And if your business is really going well, you pay back the interest, you pay back the total principal and get back the gold. So this is the overall process. So the same process will be applicable with respect to trading. So you have certain list of stocks in your holdings. For an example, you say that I have purchased certain stocks which for my long-term holdings. So I have 10 lakhs worth of shares, 5 lakhs worth of shares in my account, which is sitting idle. So what you can do is you can pledge these stocks which is there in your account to a broker and get these margin benefit. You can get this margin to trade in derivatives. Say suppose you wanted to start trading and you backtested all the systems and you see, okay, this is the overall results looks like, and this is based on the backtest results. You consider, okay, this is my total money management. As per my money management rules, this is the X amount of capital which is required to get started with this options trading. So now what you can do is, since you have long-term holdings in your account, you can pledge those long-term holdings to the broker and get margin to trade this option system. So just like how you go and pledge your gold to get money to get started with this business, similarly you are going to pledge your shares to the broker and you will get some money using which you can trade it. So the major advantage here is with respect to gold loan, you are getting money and you are paying interest. Here you're not, you are getting a margin using which you can trade options, but you don't need to pay any interest at all. It is zero interest. So it is a very big advantage. So you say suppose if you are having 10 lakhs worth of shares, so broker will check what is the stocks that you are there in the account, and based on the stock there will be certain haircut that is applicable. So they'll detect that, just like how with respect to gold they are detecting 10%. Here based on the stocks volatility, they'll detect certain percentage. So if you are having 10 lakhs, say suppose they are detecting 15%, so you will have almost 8.5 lakhs as a margin. So using that 8.5 lakhs, you can trade options. So without putting any additional capital to trade options, using your existing stock holdings, you can easily trade options. Consider for an example, you have 500 shares of Reliance in your demat account. So with current price of Reliance, which is around 2,300 rupees, the 500 shares which you hold in your demat account is worth more than 11 lakhs approximately. So now you wanted to pledge these shares with the broker so that you can get started with options trading. So what will you do? You go to the broker and you have an option to pledge these 500 shares. So the broker will check as per the exchange rules. They have a certain list of stocks and the haircut that is applicable for all those stocks. So if the stocks is really good and fundamentally good and no big volatility, they will have a haircut of 10 to 15%. If it is highly volatile, they will have a higher haircut. So considering Reliance, it has a haircut of 13.7%. So you have this 500 shares of Reliance, you go and pledge to the broker. So they'll say currently its worth is 11.6 lakhs and I have to deduct 13.6%. So I can't give you the complete 11.6 lakhs worth of money as a collateral to trade options. However, I have to deduct certain percentage for the considering the risk involved with the stocks. So we are going to give you almost 10 lakhs as a margin. So out of this 11.6 lakhs worth of shares which you have in your account, they will give you 10 lakhs as a margin, so which will be added in your account and reflecting in your trading account. You can go and get started with your options trading. So you don't need to put in additional capital here. You have 10 lakhs which is reflected in your account. So with using this 10 lakhs, you can trade with the derivative segments. You can do option selling, you can do with futures trading, but you can't do options buying, and also you can't deal with any of the cash trading activity. You can't buy and any other stocks with it. So most of the people will have this doubt. Okay, I have pledged the stocks. Now there are 3 or 4 scenarios that are possible. What happens if Reliance stock goes up? And what happens if Reliance stock goes down? And what happens if it stays flat? And what happens if Reliance announces any bonus shares, dividends or stock splits? What will happen to my holdings? So as I said earlier, margin given by the broker is completely dependent on the stock price which is there in your demat account. So currently if Reliance is trading at 2,300 rupees and if it moves to 5,000 rupees and you have 500 shares of Reliance, so when the stock price appreciates to almost 5,000 rupees, then its total value is almost 25 lakhs. So now what happens is your margin will automatically increase by default. So when your stock price was at 2,300 rupees, you were getting 10 lakhs margin. So after the deduction of haircut, now your stock price is moved to 5,000 rupees. So now what will happen is the broker will automatically calculate your total worth of shares, which is almost 25 lakhs. So in this 25 lakhs, if 13% goes off, so you almost get 21.5 lakhs as a margin. So automatically, as long as your stock price increases, the margin that you get will also automatically increase. So there is no additional cost, no additional charges, nothing. So the funds which is going to be reflected in your account every day will get updated based on the LTP of your stock price. So as long as it moves up, your margin will also move up slowly. So from 10 lakhs, it will slowly move to 11, 12, 13, 14. So when it reaches almost 5,000 rupees of share price, your total margin will be reflecting as 21.5 lakhs after this 13% reduction. So this is a very big advantage for traders if they are also long-term investors, because these stocks they are going to anyways hold it for long term. So if they buy a stock at 1,000 rupees the last year and if it moves to 2,000 rupees this year, they are getting this additional margin benefit, so they can easily scale up their trading account. So by holding the shares and instead of keeping it idle, when you pledge it and then trade it based on that, and if the stock is really fundamentally good and you've got the right stocks in your account, as long as the stock moves up, you are going to get additional margin benefit, using which you can easily scale up your trading. So now what happens if the stock goes down? Say suppose from 2,300 rupees, if the Reliance goes down to 1,000 rupees, then what will happen? So in this case, what will happen is the margin which is reflecting in your account will get reduced automatically. So what happens is your 500 shares of Reliance, which was worth more than 11 lakhs when it was trading at 2,300 rupees, will now be totally down. So when it is trading at around 1,000 rupees, so your overall worth will be 500 into 1,000, so which is approximately 5 lakhs. So broker will say, okay, now your total stock worth is only 5 lakhs. So in this 5 lakhs, I'm going to give you, deducting this 13%, the rest of the money is your margin. So which will be 4.3 lakhs. So now what happens? You have been trading with the stocks which is there in your holdings, and now because of the fall in share price, the margin collateral which you get will also get reduced. So earlier you were trading with 10 lakhs, now you have to trade with 4.3 lakhs. Because of that, you have to reduce your number of lot size that you have been trading with your options trading. This is one biggest disadvantage with respect to stocks as a collateral, because stocks are prone to fluctuations. But if the stocks is really bad like Adani, and if you have pledged Adani like shares, obviously the haircut will be bigger, first disadvantage, and the second disadvantage is as long as the stock goes down, your margin will also go down. And in case if there is no change in stock price and the stock price is continuously trading flat, obviously there will be no change. So the overall margin calculation will be totally dependent on the stock price. If it moves up, your margin which you get as a collateral will also increase. And if the stock moves down, so obviously the margin which you have got based on the collateral will go down. And if it stays flat, there is no issues. And in case if the Reliance stock or any other stock which you have there in your own holdings, if they announce any bonus, if they announce any dividends, and if they announce any stock splits, and all these corporate actions, if they do it, it will get reflected in your demat account automatically. So in considering all these four scenarios, only one scenario you are at a disadvantage when the stock price goes down. Otherwise, you are in a major advantage, because you get margin benefit. In addition to that, the stock is also going to get appreciated in the long run. So you are going to make additional returns with it. And one more thing is, so if the broker is giving you 5 lakhs or 10 lakhs as a collateral margin based on your holdings, you can use that complete 10 lakhs or 5 lakhs for intraday trading. But if you wanted to do a overnight positions, if you wanted to short a futures, stock futures or index futures, if you wanted to buy index futures and hold it overnight, or if you're doing options trading and hold it overnight, then in that case you need 50% cash and 50% collateral. So what it means is, say suppose you are initiating an option trading, a short straddle, or any kind of option selling strategy where you wanted to hold the positions overnight. So as per your whatever the positions you wanted to create, say suppose approximately if it asks you 3 lakhs margin, so in that case, say suppose you have a collateral margin of 5 lakhs. Now you can't use that 5 lakhs here. So what happens is, 3 lakhs is the required margin based on your options trading. So now you need to have 1.5 lakhs, 50% of that margin, 1.5 lakhs in cash, and you can use 1.5 lakhs from the collateral. Only then you can take the overnight positions. So this is because since overnight has a more risk than intraday, most of the brokers don't give you the full margin for that. So obviously you need to have half of that in cash and other half of it in from collateral, because if you don't have this 50% cash, then you would be charged an additional margin penalty from the broker. So they will charge you 0.05% of interest rate for whatever the money that you do not have it as a cash. So it's better, if you're trading overnight positions, make sure that you have 50% from cash and 50% from collateral. But there is a better alternative, which is, instead of using your stocks and pledging that and take overnight positions, you can pledge or you can buy stock, cash equivalents. For an example, liquid base or government bonds and all these things, or sovereign gold bonds, and all these are considered to be a cash components. So if you have these in your holdings and if you pledge that, and then if you take overnight positions, there is no issues. That can be used as a full margin. And also, initiating this pledge is much simpler by most of the brokers, starting with Zerodha, Angel, Alice Blue, or Dun. Each of these brokers has a different process, but most of the processes are almost similar. So you just have to go to their back office and you have to select what are the list of stocks that you have, and select that stock and enter the quantity which you wanted to pledge. And once you do that, automatically the pledging request will be accepted by the broker. And then you will be getting an authentication from CDSL, where you will get an SMS and email. So once you click that link, it will ask you to enter your demat ID, or it will ask you to enter your PAN card. So once you enter this PAN number or demat ID, it will send you an OTP to your registered mobile number. Once you enter that, then the process gets completed. Then immediately the margin will be reflected in your account the next day itself. So if you are pledging today, it gets processed the same day. If you are doing it before 7 o'clock, so it gets processed on the same day. So the next day you will get the margin benefit, using which you can initiate your trades with the derivative segment. And if you want to unpledge it, it is simple. You can directly go to the same console, same back office, and there will be an option to unpledge it. Once you unpledge it, then the stock gets released and it comes back to your demat account. Now you can sell it and withdraw the cash if you require. And there is always people who are worried about quarterly settlement by SEBI. So what happens is, SEBI follows a quarterly settlement process. So every 3 months once, they have to transfer all the cash which is there in your trading account back to your bank account. Now if you have to resume trading, you have to send back these cash back to your from your bank account to your trading account and start your trading. So what happens is, there could be sometimes a delay for the funds to reflect in your bank account, and if you fail to notice that, or if you miss to notice that, then you might miss your trading day. So in order to avoid this, if you have all your funds as a collateral, like if you have bought some stocks, or if you have bought some many debt funds, and if you have pledged that and if you have traded it, then the cash which is there in your trading account will be very little. So even if the broker sends that back, your trading will still go through, it will not fail because you already have the required margin as a collateral. So the orders will keep going through. So if you pledge it and then trade, there is no need to worry about quarterly settlement at all. And another thing is also, like, most people don't believe on brokers. Like, what if in case the broker defaults? So if you have some 10 lakhs, 50 lakhs in your, as a cash in your account, then obviously you're not keeping it in your account, you're actually keeping it in your broker's account. And tomorrow if brokers default, and all those cash will go away. So I know, even though there is an investor protection plan, at the maximum it is up to 5 lakhs or 10 lakhs maximum. That is the maximum money that you can get back from NSE after filing all the petitions and everything. So if a broker go bust, and if you keep any cash in their account, and everything will go away. So in order to eliminate this broker risk, it's better to keep very minimal cash in the broker's account and keep rest of the money by investing in any of the stocks or investing in any of the debt funds. And if you pledge that and then if you trade, then anyways there's the stocks and all the debt funds is going to be in your demat account. So the demat is directly linked to CDSL, a central depository system. So you don't need to be worried about brokers defaulting. So only the cash which is there in your broker's account will be at risk. If there is any stocks or if there is any holdings, it is directly linked to your demat account. So you don't need to worry about that. And finally, for the people who are already trading options, but instead of having a long-term holdings, they just have cash. So what they can do is, there are two things. If they invest in instruments like Nifty Bs, Bank Bs, there is a chance that if any of these instruments goes down, your overall margin will also go down. So if you pledge any of these instruments and then if you trade, there is a downside risk. So you can invest in debt funds. So these debt funds give you anywhere returns around 5 to 6% returns annually. So what you can do is, and if your system is making 25% to 30%, in addition to that, you are making this 5% or 6% from the debt funds with zero risk. So there is no downside. So what happens? Your margin will be completely stable, and also you are getting an additional returns from your debt funds or from whatever the cash component instruments which you have invested. So this gives you a major advantage. So instead of directly keeping it as a cash and then trade your system, you can pledge that, and you can buy any of these debt funds, and then if you pledge that, there is no risk, and you make additional 5 or 6% returns in addition to the trading strategy returns. So pledging and trading is really a very big advantage for most of the active traders out there. So if you are a guy who's also an investor, who's also a trader, who have long-term holdings, definitely go for pledging, so that you get additional margin benefit, using which you can continue to trade your option system. And if you are an option trader already who do not have any long-term holdings, but you are trading it completely by having the cash idle in your broking account, better you invest that in a debt funds, or better you invest in any of the ETFs like liquid Bs, which have zero downside risk, so that you get a fixed returns every year, and also you can smoothly trade your options trading system using that margin benefit you are getting by pledging these cash components. So this is what I wanted to convey in this video. If you guys have any questions, please post it in the comment section. I'll address it. Thank you.